And good morning, everybody, and you're very welcome to the panel this morning. If you look at the topic that we're dealing with this morning, it's AI, ML, NLP, DLT, and probably any other acronyms that people can think of. But actually, what we're trying to do here is talk about how they're actually going to be applied to real-world problems. I'm joined on the panel by Dave Shah from Bank New York Mellon, and also Garth who's from Theta. Just before my two other panelists introduce themselves, just in terms of my own background, effectively, I've worked in data and data science for over 30 years. And when I would have started out, CPU resources were very expensive, memory was very expensive, and there was a very disciplined approach in terms of people looking at what is the problem you're trying to solve and what data do you have, and then actually using an appropriate technology or appropriate method in terms of doing it. Today, I've seen 18-year-olds talk about ML, and then you ask them actually, well, what does ML mean? And you get no response. So what I'd really like to do today is talk about the new technologies out there and how they can actually solve problems. So firstly, Dave, would you like to introduce yourself?
Thanks, Sean. So Dave Shah at BNY Mellon. I run compliance technology strategy. So everything that John referred to on a day-to-day basis, trying to implement it across our compliance organization. Prior to that, I've been at the bigger institutions, Citigroup, JP Morgan, Morgan Stanley. So probably if there's any Goldman fans out there, let me know. Talk to you after this. But over to you, Garth.
Hey, thanks, Dave. By the way, Dave should be very nervous because he's on stage today with representing BNY Mellon. He's here with two vendors surrounding him, so we've got him cornered. I'm Garth. I'm responsible for product marketing at Theta, where we keep communications, new hybrid communications safe for the digital workplace. And prior to that, I've spent time as both an industry analyst a couple of times at Gartner and a serial vendor as well. So, well.
Very good. I think the first thing we're going to do is we're going to have a couple of questions that we're going to ask the panelists. And then at the end of that period, we're actually going to have some questions from the panels themselves. The first question, and I was going to ask both of you the same question, and it's really, what are the most useful benefits advanced technologies bring FIs in terms of risk management and compliance functions? So maybe, Dave, if you could start us on that.
Yeah, I think it's a great question, John, right? And it ultimately comes down to what is the problem we're trying to solve, right? Usually we use all these acronyms as you started off, but they're just acronyms, right? Sometimes the easiest problem may not require an acronym. So as we kind of look at from an organizational perspective is, what are we trying to improve on? Is it a manual process that we're trying to automate? Are we trying to gain efficiency from an organization due to manpower? Are we trying to reduce costs from an infrastructure perspective? So the list goes on, right? And as we look to evaluate either whether we're building internally or we're buying externally, what is that key problem that we're trying to solve? And obviously, as we know, there's lots of solutions out there that can solve problems, but also as financial institutions, we love to customize those problems, those solutions as well. So what meets our particular firm and our uniqueness that we're trying to solve for?
Okay, and Garth?
Yeah, I would say that the use of these technologies, we often think of it, obviously, at this venue in terms of managing risk. And I think that, obviously that's an important quality, but we also look at it in terms of solving problems for scale, right? We often start small and look at identifying risk, pattern recognition, trying to make sense of the deluge of data that we have today in today's workplace, unstructured content, voice, video, text. And while we're solving those problems, we're solving them at scale, and we'll often find that the repercussions can, trickle down in other places, right? If we're solving and allocating the right resources for risk identification, well, now resources can be allocated for better customer satisfaction or better compliance review or productivity. So these are often very assistive technologies, And the ripple effects and kind of the exponential scale that we solve for can be a positive thing.
Okay, very interesting. And then just a related question, and it's, with an increasing choice of RegTech solutions, is it becoming tougher or easier to understand which product might be a good fit? And for Dave, maybe first?
I mean, I think the solution is really tougher, right? I mean, look around us, right? How many vendors do we have today? And if you look at the overlap on the solution that you're trying to provide, right, there's commonalities around that aspect. There are startups all around the world as well, right? You're talking about big names. So as we as individuals have to assess which one meets our needs, there's always that analysis that needs to be done, right? That due diligence, not only just from a solution perspective, but even from a firm perspective, right? If we are actually using a vendor, what is their reputation, right? What other financial institutions do they work with? How can we as a bank with other banks defend that as well as we go to the regulators? So I think ultimately solutions every day, how many new LLCs are being created, it's just becoming tougher and tougher. And even internal builds, sometimes, especially when you come into an organization, you may not even know one particular business process may be solved with 6 different solutions across 6 different lines of businesses. And you may find out, hey, there's this new acronym. Why? Right? So ultimately, trying to bring that all together, trying to come up with a strategy that is meaningful for the firm is quite important. And the problems are only getting harder and harder, right, as we come up with fancier, shinier things just to make the day-to-day easier.
Yeah, I don't envy you, Dave. I can imagine how tough it is. Vendors don't make it easier, right? When I was at Gartner, had a similar challenge in terms of navigating the landscape, because to Dave's point, you have legacy vendors, you have older vendors looking to reinvent themselves, you have startups, you have everything in between, and then you have, I think, something we'll be talking about today, much like cloud washing. A decade ago, everything is now with AI. It's like your breakfast cereal is better, now with AI or ML or NLP. And it has to be overwhelming for buyers and organizations to have to navigate through this, because it's also a multi-stakeholder journey, right? When we look at the problems we're solving across the governance, risk, and compliance spectrum, there's IT personnel that have architectural requirements. There's obviously the compliance personnel who may be, somewhat reluctant, to put it kindly, to embrace a new vendor or technology, maybe a little more risk averse, given their role and culture. And then you've got C-level personnel, and everyone's coming at that from a different perspective, and everyone has different wants and needs. So then you throw the vendor landscape in there, and they're coming at it with different value propositions, different claims, some outrageous, some realistic, and it's definitely challenging. So I do think for today's buyer, you have to be very, very laser focused on the problems you're looking to solve.
Kind of flipping it back, right? John, to you. You're a founder of a company, right? Why did you actually come up with this product, right? As a true believer of, when we talk about making it tougher, there are solutions out there already, right, that do what Corlytics does. So there must be a reason, right, and a cause. And that's why I think it's on a day-to-day for a financial institution becoming harder.
Well, I mean, I've done this a number of times. So I started my first technology company in the late 80s, a bit old now. But it's, I think every decade in selling into financial services companies, it's getting more and more difficult. So, you knowing what's involved in starting a RegTech business or a FinTech business, you have to have a really compelling reason to want to do it. So I think there's really 2 reasons why I would have got into this. One was from my previous company where we worked in post-trade, we could see that people were starting to use a risk-based approach in lots of different parts of financial services. So if you look at credit, everything in credit is done and things are prioritized based on risk. If you look at on the market side and global market side, people look at market risk and then they look at currency risk. So risk is driving everything. One of the things that I started seeing after about, say, 2011 or 2012 was the regulators started getting really tough post the last financial crisis. And they felt that large firms weren't listening to them. So how do you get a large firm to listen to you? Well, how about $1 billion fine? That wakes everybody up. And then, so once one regulator started fining people in this sort of order of magnitude, lots of regulators got in on the act. So much so that the legal and regulatory risk today is probably as big, if not bigger, than market risk for an awful lot of firms. So what I wanted to do was actually use a risk-based approach in terms of looking at compliance, because it's a risk. There's hundreds of things have to be done in compliance. And some of the things could bring down the bank, and some of the things are perfunctory. And I wanted to find a way where you could actually do that. That was my rationale in doing it. But based on the conversation that we've just been having, there's really three things to me that are really emerging. One of them is, and I've been in FinTech for a long time, and you start off as a vendor and you build something really cool, and somebody buys it who's medium-sized, and eventually get it to work for that person. And then you go into the top 50 banks, and then your application has to scale. So you mentioned scale. The issue, I think, in RegTech is there's a lot of cool stuff out there, but really three questions about them. A, do they scale? Can they solve the problem at scale? But B, the next thing is, do they deliver, particularly in the space we're in, do they deliver accuracy? Are they accurate? And the third is, are they consistent? Because unless you have accuracy and consistency in terms of automating things, you can't automate if something is iffy. You can't automate if something doesn't deliver accuracy. So really, to be in this business at scale, you have to drop being in the acronyms business, and you better quickly get into the accuracy business and the ability to deliver at scale. And I think they're the things that will basically filter out all of the recently arrived vendors to the ones that actually will be able to really deliver for the larger institutions. So I don't know, Dave, how you feel about that?
No, I mean, I think it's a great 3 points. From a receiver perspective, I'll add a fourth called cost, right? Yeah. Because you can always do those three, but then if you come with a bill that costs way above what the institution can afford, right, it's not even a question at the table. So ultimately, that's the day-to-day problem that we face, right, from a technology perspective, a strategy perspective, whatever you want to call it, right? These are the scenarios in which we all have to answer for, right? And ultimately, and earlier Julie from BNY mentioned it, right? She's the one that has to explain it to the regulator. So it can't just say, I bought this nice shiny thing that Dave wanted to pay for, but ultimately it's also justifiable, right, to a regulator as to why we did it and what exactly is it solving for.
But I think that's what makes the industry we're in unique, in that if you look at RegTech solutions, there are actually two stakeholders. There's the FI itself and the people on the compliance side, who in a lot of ways, something bad may happen to them if the project isn't successful. And the second is the regulator, because what the regulator thinks about what you're doing in this space really matters. And these are much more difficult, I think, than, say, trading technology or other things. So in a trading technology, and I've been there before, you're dealing with the business on the trading side, and they're going straight into the vendor. Here, there's more of a triangle between you, the firm, and the regulator, because you do have this a lot of these projects are being mandated, some of them by regulators, and it's a part of the triangle. How do you feel about that?
I think that's the word that I use on a daily basis, right? And I refer to a lot of the explanations that we give to the people that ultimately are paying. It is a triangle, right? Because, and a lot of what I've noticed with the vendors, I'm sure Garth can agree with this, is that they have a seat at the table, right? Because ultimately, some of that information is proprietary, right? So you can only share so much with individual or the organization that's buying it. So when we do have to sit with the regulator, right, if we're not able to explain it, ultimately the vendor better be held accountable and explain it.
Yeah, really good points, and just building on a couple of observations that you both made around scale and cost, Dave. I think they go hand in hand, and a few things. For smaller FIs, it's where AI and ML and NLP have been, have not really been executed upon and utilized, is because that issue of scale and complexity overwhelms a lot of the marketplace, and a lot of offerings are tailored towards what I would call science projects, right, that are very services driven. You made the point, Dave, and also John, it's a relationship, it's a triangle with the regulator, the vendor, and yourself. And a good vendor is going to do a few things, right? They're going to know your business. They're going to know the data, right, that they're going to be utilizing. And they're going to be able to deliver something that shouldn't be a one-off, right? If we're talking about one-off AI projects, well, to your point, with enough time and money, anybody can do that, and probably with some good results. But it's not going to be scalable for the vendor, who you want to still be supporting you in 2 to 3 years. You want them to still be around. And it's not going to be able to support, a spectrum of market opportunities, which, kind of results in where we are today, where a lot of AI usage in FinTech and RegTech is still fragmented, right? And we're still in, an earlier adoption phase.
Yeah, I think they're all very interesting points, but I think just staying on the point with scale and AI, at the end of the day, if you look at models that people are making, the more scale you have, actually the better your models and the more reliable your models are going to be, because you're actually going through a lot of data. And I think that we really are going to get to a point where the players or the vendors that can scale with their clients are actually the ones that are going to have most of the market share. I was just going to move on and just ask a slightly different question, but I think everybody here knows what AI is. Does anybody here know what AS is? Okay, artificial stupidity. So I chaired in Ireland, I chaired the Data Science Institute. So every single project that's funded publicly or by the EU, it goes through the centre, and we prioritise projects that are going to happen. And one of the things that we see a lot are where something is broken, and people think that by throwing AI at a poorly defined problem is going to fix it, or where people are throwing a solution at something where they've no idea at all what the problem is going to be, that they're going to fix it. And really what I think we need to be very careful of as an industry is, these acronyms are being overused, but some of the methods, if you look at machine learning is a very good solution to specific problems in specific instances. But it's probably useful in about 5% of cases. And yet I hear so many ex-photocopy salespeople talk about ML like it's going to solve everything, but it doesn't. And I was just going to ask the panel members just an example of where you would see this phenomenon happening. So like a horror story here, and then a place where you've actually seen a good outcome. So Dave, would you be able to?
No comment.
No comment.
Okay. Yeah, I think you're 100% on point, John, right? On a day-to-day basis, how many times do we sit in a conference room and a senior person throws the word, why don't we just use AI? You ask them to even spell the words, right? They won't even know. But just use it. What am I supposed to use, right? Like, it's a data problem. We need to create a report. Just use AI. But we need to create an Excel report. Okay, AI will solve the problem, right? Whatever you need backing-wise. So I think in education is really needed, right? Ultimately, yes, there are AIs and MLs that we can utilize on a day-to-day basis that can solve problems, but we really do need to understand what that problem is. And what is that end goal or end state that we're trying to reach as a firm or to solve that problem? Because no matter what that end state is, you can always add AI ML after the fact, right? You can make it smarter. But that doesn't mean that you need to go buy this, again, I'll refer to the nice shiny thing, right? As whatever it means, because that's not the decision you need to make today. We need to make the decision today of what we need to do, what is the problem we're trying to solve for, how are we going to get to that end state, what's that timeline to get to it. So, you know, probably most of us use these acronyms, and I know we didn't even refer to one of the acronyms because DLT, right? Oh, now it's the next great thing. Many people don't even know what it stands for. Forget even the acronym itself. Okay, at least we can justify in AI and ML, 2 letters. 3 letters, oh my God, right? Forget it. So at the end of the day, we as institutions need to be careful when we're sitting in rooms and before we're committing to using these technologies. Because ultimately they're going in charters or commitments to the regulator and they're saying, well, show us. What are your models, right? And how are you training those models? Or what is the underlying technology? What do you mean? It's just an Excel report, but it's AI, right? So I think we actually need to be cognizant of using these terminologies, not just to act smart, right? But to really try to make a difference in the problem.
Yeah, I can't resist that, John, that AS acronym. I propose that we extend it a little bit and make it artificial stupidity science, right? So it could actually be a discipline. But yeah, you know, I think that what you guys are saying in terms of it's a hammer that solves, you know, every problem with a nail. We've seen this before, right? Depending on how long you've been around, like me, going back to earliest text analytics, right? 20 years ago, 25 years ago, we were talking about how text analytics and OCR would solve all of the identification and all of the challenges that came with managing paper, right? So that didn't really turn out so great, right? That early on. So this has been happening for a while, and it goes hand in hand with, you know, kind of a lot of the enthusiasm and sort of AI washing that happens in the marketplace. I'd say, you know, in terms of the difference that AI can make and machine learning, I was speaking with a customer, a client this week, and it can be pretty profound when you think about the way the workplace has changed just in the last 2 years, right? We've adopted video and face-to-face video communications in the financial services world every day, right? Brokers are now having those types of discussions that might be an outbound 60-second to 90-second outbound message to a customer that has a question where they're doing that. But because those communications are regulated, you know, they still need to be reviewed and inspected and made sure there isn't anything that's happening that's breaking regulatory requirements. So, you know, this customer was able to get video adoption greatly enhanced, make those brokers really productive, and get them out of having conversations that would often be done with a very lengthy email or an elongated phone call, so that's freeing them up throughout the day. And the regulators, the compliance team, is happy because, you know, now they're able to identify through text analytics things that are happening on camera. So if the broker wants to share and preview disclosures that they'll be signing, they can show it to them on screen and make certain that there isn't any sort of you know, PII or any sort of, you know, data loss occurring. And it makes the compliance team happy. So in that example, you have business transformation, right, through an enhanced use of video. You have regulators being, you know, put at ease. You have enhanced productivity for brokers and sales personnel who can now do more during the day, freeing them up, and they're also not worn down. So, and that's just a very small, you know, pattern recognition use case where, you know, you're looking to identify risk and you're looking to review video really quickly, right? So big things are possible through small use cases sometimes.
Okay, I must say I quite like that as a phrase. Just one thing I think as well we might kind of get back to is, you know, we've been talking about AI, we've been talking about the purpose of it. We've been talking about, it has to be deliver at scale, or it's probably not worth doing at all. But the flip side of it is, if you look at today's problem, I think the problems that a lot of global firms have is that they can no longer manage either using Excel or manually, and that's the problem that has to be solved. So yeah, there are challenges in terms of the automation and the technology, but then if you look at the other side, there is a very compelling problem, it seems to me, that has to be fixed. So how would you see the biggest challenge that you think needs to be fixed in this space, Dave?
I mean, the list of challenges are endless, right? So it's which is the highest priority for a firm, right? Every firm has X amount of resources, X amount of financial money investment that they can do on solutions. So if we roll it back to technology trying to help us there, from our perspective, right, where are we going to find the most? What is our most exposed risk, right, from a firm, and what are the problems that we're trying to solve there? What do we know is end of life, right, that we absolutely need to come off before we expose ourselves, self-inflicted, as we call it, right? At the end of the day, there is a prioritization exercise, right? We all go through it on a day-to-day basis, and what we do from our perspective is looking at our financial footprint, looking at where our risk is, and doing a true analysis, right? What can we live with, right? Maybe we don't need the ML aspect in 2023, right? Maybe we just start with automating these 3 initial steps. As you alluded to before, even forget technology for a moment, right? Is the problem related to a policy, or is the problem even well-defined? Is it, people, or something else from that matter? So really just knowing, before we talk about technology solving it, identifying what that root cause is important for us.
Yeah, well said. And I think looking at keeping things in perspective is really important with these types of endeavors and initiatives. To Dave's point, what is the problem you're looking to solve? Is it a reasonable, expectation that it's something that's going to be aided by the adoption of AI and ML and NLP? Is it something that, are we really looking at the technology in the right context, which is as assistive, right? It's not going to be a panacea for everything. And to your point, John, if the process and the data is bad going in, if it's a bad manual process, simply throwing technology at it is not going to alleviate it. That's been the case always, with technology, right? You still have to have the process and the workflow down right to understand and solve that problem. So, these technologies are assistants. They're assistive in terms of enhancing productivity, helping people, surface risk in the volume of data that they're facing or challenged with every day. But they need to be kept in that right sort of perspective so that, to Dave's point, the problem is you're not looking to identify all of the risk in your unstructured communications, for example. You're looking to give you some great pointers and a map of that. You're still going to need people at the end of the day in the right places, in the right chairs, to ultimately make those decisions that, assistive technologies have guided them towards.
Okay, and just maybe a last question for us, and then there's a few questions from the audience. But if you look at the scope of what we're talking about, which is problems in risk and problems in compliance, and you took a 5-year view, Dave, in an ideal world, and you look at the landscape today, what problems would you like to see in a 5-year time horizon solved?
I mean, if I think we all knew them, we would solve for them probably today, right? So I think what's hot probably on everyone's radar is, right, the acronym that's right in front of us, DLT, right? Crypto. Customers want it. Institutions want to support the customers and make money, but we don't really know how, right, at the end of the day. So we know that's the hot topic. Every financial institution will mention that, right? Every financial institution probably has a small embedded startup within their organization working on something, right? But is it a 5-year plan? Who knows, right? What if something drastically happens tomorrow, which is possible, right? Especially given the regulatory landscape that we all work in on day in and day out. So it's hard. It's kind of like that question you get during an interview, where do you want to be in 5 years? Well, I want to take over your job. Where do you want to be, right? Like, so if I knew what the 5-year roadmap was, right, I think we would come to probably all the vendors here and saying, please solve it, right? And you guys would be happily take on that request. But I think just knowing where the industry's going and the continuous change that we have, it's very hard.
Yeah, well said. Well, I was really looking forward to an answer that was going to give me more granularity, Dave, so that we could bring you over to table 7 and start talking about those challenges. But you know, if we look at the problems that we're solving for today, they've been around for forever, right? They just change, they mutate, right? Across communication types. You know, we started solving for email regulatory compliance violations, you know, in the early part of this century, and we're still solving for them today. Those problems have, you know, changed to different communications, voice, video, SMS. So the problems, you know, are we going to solve those problems 5 years from now? You know, the cynical, skeptical part of me would say, probably not, right? There'll be a whole slew of new problems, to Dave's point, I think. But will we see some advancement and you know, some improvement in the way that we think about it? I hope so. I think when we look at the current landscape in terms of solving for, you know, surveillance and supervision in the regulated markets, ideally, you know, those things will start to happen at the platform level. You know, so as you're using and adopting a unified communications platform, they may have, you know, risk detection built in. They may have policy enablement built in, or detect for you know, potential policy violations across all of the different modalities. So, you know, I think in terms of systems, I think, you know, from a architecture standpoint, we'll probably start to see more consolidation and more integration at the sort of platform level as we start to, you know, understand and utilize and leverage AI and ML more and more.
Yeah, I mean, I have a friend of mine, and he worked in a fairly large technology company. He was head of product management, and a new CEO came in, and he sent him a fairly unfriendly email. It was pretty stiff, and he said, "Can you tell me what our product trends are going to be for the next 5 years?" But the tone was pretty awful. And my friend said, actually, if I could predict what's going to happen in the next 5 years, the roles would be reversed. But you know, it's really hard to, it's very hard, particularly now, to look at a 5-year view. One of the things I would say, Dave, that we're seeing is there's a lot more activity from regulators in terms of talking about regulating crypto, and it's moving from just discussions into, you know, some real regulation that's out there. So I think there's going to be a real move to really start regulating and tightening up on that asset class. I think that's for sure. I think we're now at a point where we have a couple of questions from the audience.
Great.
Some of them are directed to you, Dave, and some of them are just general. But so I might go to the question that was addressed to you first. So it said, Dave mentioned that there was a tendency to want to jump to fix problems with AI, perhaps too presumptuously. What are the consequences of doing this?
I mean, I think that's obvious, right? Fines, right? Sometimes we all make decisions while, again, the nice shiny thing seems great, can solve the problem, but I haven't defined it. But price is right, let's buy it, not being able to now explain it, or I'll say compliance, not being able to explain it to the regulator what we're doing with it. Because ultimately we are accountable, right, to internal audit, to the regulators of what systems we're doing. We as a firm intentionally try not to tie technology to our regulatory commitments. Why? Because it's the unknown, it's the black box, right? Sometimes we know what's there, sometimes we don't. Whether it's in-house or external, right, it doesn't matter. If you tie it to a technology solution and not the actual business process, we potentially could set ourselves up to fail. So I think from our perspective, it's very important to determine that right from the get-go.
It's funny you mentioned that, because one of the things that we would see from regulators is if you're using machine learning, there's very little explainability there. So one of the drawbacks of using machine learning, you may solve a problem and you may get to a point, but because there's no real audit trail as to how the algorithms got there, that's a big problem for regulators in a couple of areas. And it's one of the drawbacks that people need. I mean, there's plenty of methods that people can use in AI. It's a very overused term. And that's why, people are looking at, there's a whole class of AI called explainable AI, and I think we're going to see an awful lot more of that in our industry. So
there's your 5-year answer, by the way. What's the problem we're going to solve, right? Is explainability in AI and having to produce, works and sort of an audit trail around those works.
Yeah, I think one of the things is sustainability, right? If we all talk about we want to do this, well, ultimately when you do buy it or you do roll it out, how do you maintain it? How do you keep up to it, right?
Yeah.
And do you have the expertise in-house to do it? Because we're not going to continuously outsource it, because then again, you don't have that SME knowledge now in-house. So ultimately, do you have those data scientists that can continue to enhance those models, can even explain the models in some cases, right? And where are they? Because right now, they're the ones creating the models.
Yeah, it's funny because you mentioned cost, Dave, because on the other side, we're a vendor. One of the things we can see is, if you look at the cost of developing something in the beginning, it's about 20% of what it actually costs. If you look at the cost of running something in production, making it available at scale, making it secure, all of those costs, that's about 80% of the cost is actually what happens afterwards. So it's one of the things we're finding is that the cost of maintaining these solutions as a vendor is actually going up, because we also will be regulated. Effectively, we've been regulated because of some of the contracts were entered. You have regulatory requirements that you will put on us, which effectively is adding to it. And that really comes to kind of a related question that people have about RegTech firms, how many there are, and basically is it going to be a shakeout? And I'd like your views, but just my own is that because the actual cost of doing business, the cost of maintaining these systems, the cost of becoming compliant is going up, it inevitably means that there will be only a critical number of vendors who will reach critical mass to be able to sustain those costs. But I'd like to get your perspective and your perspective as well, Garth, on that. So Dave?
No, I mean, the list, as we referred to, is endless, right? And is it a battle between the various vendors on the solutions? Absolutely, right? Every financial institution runs an RFI, RFP process, right? We start narrowing down based upon what our MVP is. Ultimately, one is selected. Is it faith? Sure. Is it luck? Absolutely, right? But ultimately, is it the right decision? We don't know, right? And then ultimately, that also helps, I think, especially in the case of external builds, building out that roadmap. Because you know now what the firm wants, what we've committed to financially. So we're vested. It's kind of almost like a marriage, right? You kind of told us you can cook all these things. We get in the kitchen, right? Not sit on the couch type of scenario. So I think ultimately we have to partner together to determine what is that roadmap, what is those timelines, and deliver on them.
Yeah, well said. And I would just offer this, when you look at the future of the vendor landscape and really kind of the economics of it, John made a really good point. One is that, the cost of doing business for a vendor, it's not free, right? And so things you can do from a vendor adoption, looking at these vendors, standpoint, I mentioned, beware of science projects, right? Beware of, to Dave's point, becoming dependent on a vendor that understands and has built all of the models for you, has all of the IP about how this works, and basically is a gatekeeper for your business now, right? What happens if and when that vendor, if they get acquired, they go out of business, they lose key personnel, all possibilities. And to Dave's point, if you don't have the personnel internally to support and understand and build that and not be dependent, you're in a lot of trouble. The other part of that is in these sort of exploratory, again, I call them science projects, but the hype, the sizzle, the potential about AI is there, and we may be focused on that. But do your homework and look at the boring stuff also, because look at the boring stuff in terms of what's this vendor's architecture, how are they absorbing those costs? Are they going to be passing on their AWS costs, their Azure costs, their processing costs, their storage costs, their backup costs, their security, their SOC costs to me ultimately? Maybe they gave me a great entry point, but ultimately that's going to catch up with the vendor. So, do your homework, look at the boring stuff, the infrastructure stuff first, the total cost of ownership of these endeavors, and then the reliance you have on that vendor. And look for vendors that can support your own estate and fit into your deployment model and your architecture and are transparent about the costs of these initiatives. And I think you'll rest a lot easier.
Yeah, I think taking one of John's questions and moving it, what were we concentrating 5 years ago? You sort of answered it, right? And it's not really here, cloud, right? Financial institutions used to be shared, right? Scared probably to the point where we're not moving to the cloud. Now, is the option even really there? Not really, right? It's sort of forced to use it. So we had to adapt. Whether we did it correctly or not, time will tell, but we all adapted. Same thing with these technologies, right? If it's 5% of the use cases we're solving for, we will adapt. It's just going to be how.
Yeah, will it be incremental or will it be game-changing?
Right.
Yeah, so we're very nearly out of time. So I have one question, and it's directed towards you, Dave, I'm afraid. And it's basically saying, what are some of the biggest mistakes you see FIs making when implementing RegTech solutions?
I think making drastic decisions, right? And I think we sort of answered that earlier. Just pointing to the nice shiny thing and saying, yep, John treated me to a nice dinner, let's sign the bill, right? And pay that off. So I think ultimately just being realistic and being able to justify that, right? Having the right people at the, doing that analysis, right? Our TPG partners do a great job in our firm asking all the right questions that the technologist or compliance won't, right? To do a due diligence review on the vendor and making sure that what we're signing up for is a marriage, right? At the end of the day, and making sure that we will succeed. So from our perspective, that is a key part that we rely on, at least I rely on. So yes, we found the nice shiny thing, but is it a marriage that the firm wants to make, right? That's not my decision, really.
Okay, so we're very nearly out of time. So we came into this talking about AI, ML, NLP, DTL. Unfortunately, we've talked about things that are a little bit more down to planet Earth. We talked about AS, scale, and TCO. Okay, I'd just like you to thank the panel members for contributing today. Thank you very much.